Bill Gates explains how to invest in stocks and build wealth. Welcome back to Wealth-ology. For today's video, we will be going to talk about Bill Gates' explain how to invest in stocks and build wealth. Let's get started. With a net worth of $102 billion, Bill Gates is the second richest person in the world. Yes, Bill Gates made a significant portion of his wealth through Microsoft, which is an intriguing fact about him that few people are aware of, but also by being a really astute investor. Rule 1. Always back American business. Gates said, quote, "I'm bullish on the, us businesses and global businesses. So we're not, in some defensive posture where we're mostly in cash or anything like that. This strategy that's been used on the investments is to be over 60% in equities. And you couldn't, calling market turns in a very tough thing to do. You can make the case that the yields aren't very high, but that's true across all asset classes. I mean, T-bills a 10-year, less than 2%. So there's no, obvious thing to beat other investors out there. And there's reason to think absolute returns for the next decade will be less than they have been for the last several decades," unquote. Rule number 2. Technology business are the future. Gates said, quote, "Apple is the largest company in the world. Can Microsoft catch up? Well, it's amazing how well all the top technology companies are doing. Google's doing well. Apple's doing well. Microsoft's doing well. It speaks to the fact that the digital revolution has just begun. I mean, we're getting on to your wrist now. We're gonna do robots. There's all sorts of ways that the software revolution is just starting," unquote. Rule number 3. Use Warren Buffett as an investing mentor. Bill, quote, "Whenever I see something, take these very low interest rates, even negative interest rates. I'm always thinking, boy, I'm looking forward to talking to work about that. One thing that's fun is you have a very optimistic view about things," unquote. Buffett, quote, "I think if I'm sort of neutral in terms of optimism or pessimism and I look at the facts around me, I look at what has happened in my lifetime. Put 3 of me and you're back before the Declaration of Independence was written. That progress, and in 3 lifetimes like mine, it's mind-blowing," unquote. Bill, quote, "Since I've known you, you've always been good at taking finance things and making them simple. Do you think that came naturally or did you learn over time, just answering questions about finance a decade after decade," unquote. Buffett, "It started teaching, of course, when I was 21 years old in the University of Oklahoma. I did that because I was terrified of public speaking earlier, and they're taking a Dale Carnegie course, and I felt I just had to get out there and start talking standing up for 2 hours in front of a class. Helped me and learning to explain things," unquote. Reporter, quote, "Well, that's amazing. How you've gone through market periods that are utterly different, and yet your basic rules about what to do remain unchanged," unquote. Buffett, quote, "Yeah, the rules work if they're not the easiest to apply. They won't tell you exactly what to buy or to sell, obviously, but you'll never do anything stupid. If you follow some fairly simple principles, when you have the chance to buy something a extraordinary value, whether it's a farm or an apartment house or a piece of a business or an entire business, the time to do it is then, and not worry about whether you could do. It's a little cheaper a month later, 2 months later," unquote. Rule number 4. There is great opportunity in AI business. Gates said, quote, "Well, AI, the paradigmatic question for anybody who's ever written a piece of software is, what is the software that's controlling a human? Its ability to write symphonies, play chess, engage in social activities. Read, computers we picked, that a we would define a by certain sensory perception thing, primarily speech understanding and vision, and that those would be the frontier. Also chess playing, but that turned out to be really solvable. That is to be better than humans by brute force techniques. So that kind of got taken off about 15 years ago. But you're always wondering, when can I create a computer that could take, say, a textbook, read it, take the AP exam, and get a 5. And that's completely unsolved. So the most interesting, this guy Hilbert Reid out 22 problems for mathematicians in 1900s. If you think of the equivalent of software problem number 1, that sort of subsumes most of the other problems. Although there are things about simulating the environment that are also interesting anyway. Problem number 1 is not solved. And so, that's what you would work on. If your mind, from age, say, 11, is thinking about software and what can it do? What can it not do? And then, you think you're really good at writing code, and then you meet somebody who's better and you think, okay, now I'm really good. Then you meet somebody who's better, by age 18 actually. You might be pretty good. So the rest of your life, you're going to think about the structure of the software that can do the equivalent of what a human can do. So I would definitely be drawn to that now." Unquote. Rule number 5. Invest in dividend stocks. The intriguing thing you'll discover if you'll examine Bill Gates' stock portfolio is that of the 14 publicly traded stocks in his portfolio, 11 are dividend-paying securities. In general, it's a good sign for a company when it has extra cash flow and can afford to distribute some of it to shareholders. In a perfect world, they'd be paying part of their profits as a dividend and reinventing some of them to expand the company. As you can see from his portfolio, Gates appears to be achieving a decent balance. Here, he owns stock like Walmart, which has a respectable dividend yield of 1.75%. However, Walmart also uses a portion of its profits to reinvest in the company, grow, and do things like e-commerce and other things. Waste Management there distributes 55% of its profit as a dividend, with the remaining 45% going back into the company. It's the same story with UPS Supply. Even though they pay out the majority of their profits as dividends, they nevertheless invest back into the company. It's crucial to find a balance. Rule number 6. Invest long-term. The final notable pattern we found in our analysis of Bill Gates was that he is a long-term investor. He doesn't purchase a business and keep it for 2 or 3 years before selling it. He spends time and effort purchasing high-quality companies and then holding them for a considerable amount of time, alongside his portfolio manager. Bill Gates said, quote, "We are long-term oriented, and I don't think that we understand the macroeconomics enough that we are making bets that are specific to that piece," unquote. He said, quote, "I believe in the philosophy that Warren Buffett has put forth, and you can find great companies and invest in them. Then macroeconomics can go up and down, and the basic value of what you are holding on to there will be maintained throughout that," unquote. He's basically attempting to argue that he doesn't time to market. Instead, he merely invests in high-quality companies. And you can see that in companies he owns, including Berkshire Hathaway's, a computable investment firm. When he first met Warren Buffett in 1991, he had probably held that for almost 30 years. Another illustration is Canadian National Railway, a premium company with a sustainable competitive advantage that has been owned for a long time. It was brought back by him in 2000s. His approach to investing is straightforward: purchase high quality companies and teasing prices, and hold them for a long time. Which aspect of this subject have you found to be very useful? Please let me know in the comment section below. And if you like this video, please give it a thumbs up, turn on the notification bell, and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video.